Hey guys, Bill P here from BB3 Crypto on BB3 TV. Welcome back to the channel. Remember, this is not financial advice, educational advice only, and I hope that you're good wherever you are and whatever you're doing. It's a great day today here on the East Coast of the United States, and keeping in line with my shorter videos, I would like to go over something that's very important to all of us, in the United States at least, and there should have been clarification already. But let's bring me down here a little bit and show you what I mean. So 5 members of the Congress today strongly urge the IRS to update Bitcoin tax guidelines. All right, so they're going to go over it a little bit as an article, but back in 2014 when the first regulations came out again in regards to cryptocurrency and taxes, cryptocurrency was considered property. So it followed the same, capital gains and same tax laws as property. You paid your taxes on the profit after you sold out. You buy some property, you hold it for 5 years, you get rid of the property, you make a profit, you pay some tax. All right, cool. The IRS has since changed things and made things kind of confusing and haven't gone as far as clarifying things, and now are starting to enforce some of these obscure or unclear rules against members of the cryptocurrency community. So let's take a look at it and let's see what's happening, who these 5 representatives are, and what they're asking the IRS. A group of U.S. legislators has asked the Internal Revenue Service to provide updated guidelines on how taxpayers should report profits associated with investing in Bitcoin and other cryptocurrency assets. Republicans criticized the IRS for enforcing tax law without clear guidance. In a letter dated September 19th, yesterday, and published on the White House Ways and Means Committee website, 5 representatives, Kevin Bradley, Republican Texas, David Schweikert, Republican Arizona, Lynn Johnson, Republican Kansas, Darren LaHood, Republican Illinois, and Brad Wenstrup, Republican Ohio, strongly urged the IRS to issue comprehensive, updated guidance on federal tax obligations with disposing cryptocurrency assets, either through trading or other means. The group of Republican lawmakers had sent the IRS a letter last May expressing concerns over the agency's decision to ramp up enforcement of cryptocurrency-related violations without also adopting a comprehensive virtual currency strategy to help taxpayers more successfully navigate the murky regulatory code. In this week's letter, they criticized the IRS for failing to address their concerns. More than a year after our initial letter, the IRS continues to expand its enforcement of activities without issuing any further guidance to taxpayers. We therefore write again today to strongly urge the IRS to issue updated guidance, providing additional clarity for taxpayers seeking to better understand and comply with their tax obligations when using virtual currencies. The legislators repeatedly contrasted the agency's increasing enforcement of cryptocurrency tax evasion, which included the taking trading platform Coinbase to court to obtain information on customer transactions, with its implicit refusal to provide either an updated guidance or safe harbor for taxpayers who make a good faith effort to report their cryptocurrency related gains. Despite the issuance of only preliminary guidance on this issue, the IRS has made enforcement of this guidance a priority, undertaking robust enforcement actions on a number of fronts. The lawmakers wrote, at the same time, the IRS announced it would not be providing leniency for taxpayers by allowing a voluntary disclosure program to address non-compliance related issues. So there's going to be no relief, okay? No period where, hey, I tried, or I didn't understand, or from now on I will. No, they're saying that don't sit around and wait for something like this, pay your taxes, but they're not actually making it clear on what you're legally obligated to. Lawmakers set October 17th deadline. So this is great, you know what I mean? This is great that the lawmakers are standing up for us, the people, are trying to find out what the IRS really wants and then disseminate that information across the cryptocurrency community. Current IRS guidance on cryptocurrency dates back to 2014 when Bitcoin traded at its fractional of its current value and most currently existed altcoins had not even been invented. That preliminary guidance treats cryptocurrencies as property for reporting purposes, meaning that taxpayers are supposed to pay capital gains on any profits realized when they dispose of their coins, even when disposing them through a transaction as minor as purchasing a cup of coffee at a Bitcoin-friendly restaurant. The agency has been conspicuously silent, however, on the complex situations such as cryptocurrency hard forks, when a blockchain split leaves investors with coins on multiple networks, coins that they may not even want. In one of the letter's more pointed sections, the legislators said they were concerned that the IRS was failing to adequately advise taxpayers of their reporting obligations, neglecting one of the agency's primary duties as a government organization. So if you take a look at the IRS and what they are tasked to do, they aren't only just tasked to collect taxes and collect revenues, but they're also supposed to provide guidance and a framework to the taxpayers so that they can, in good faith, pay their taxes. They are not doing this, so they are in fault of this. To take it one step further, and we'll hear about this in a second, but what if they're going to imprison somebody, but not tell you why? Does that sound like free USA? No. It could be, they wrote, a key component of the IRS duties as the nation's tax administrator is to assist taxpayers in understanding what their tax obligations are and how they may best meet them. A failure to put forth adequate guidance severely hinders the taxpayers' ability to do so. The IRS has had 4 years to work through these issues since its preliminary guidance was issued, providing more than adequate time for the IRS to thoroughly consider what additional information is needed. Okay, so the lawmakers concluded the letter by calling for the IRS to expeditiously issue more robust guidance on cryptocurrencies and giving the agency an October 17th deadline to provide the Ways and Means Committee with information about its plans to draft and issue updated guidance, as well as a timeline for eventual publication. So, wow, right? May sound like a little bit of mumbo jumbo, but we'll leave this right here. Lawmakers set October 17th deadline. So what's happening? Okay, so at first cryptocurrency was considered property, and it was under the same guidelines like if I bought a field and held on to it for 10 years and then sold it, I would pay capital gains on that, unless of course it was my primary residence and I moved into another primary residence. There's also a difference when you sell property within 1 year of purchase and after 1 year of purchase. A higher tax rate in a short term, a lower tax rate in a long term. So things have changed, right? And it's been very confusing on figuring out how they changed and why. From what I can gather right now, the IRS wants its portion of taxes every time a cryptocurrency is disposed of. Okay, so if I buy a cryptocurrency and then I sell that cryptocurrency, it's disposed of. I would pay tax on that if I made a profit. If I did not make a profit, I would not pay tax on that. But would I record a loss? And would I take that loss off of my taxable income? Would that loss cancel out a previous gain? Are these to be figured out every time a trade is done and paid for? Or are these to be figured out and paid for once a year, once a quarter? If I'm going to buy some, say, engine coin, for example, and I don't have Bitcoin to buy the engine coin, and I go ahead and sell my NEO to get some Bitcoin to buy the engine coin, where and what taxes do I owe? Do I owe taxes for selling the Bitcoin because it was disposed of? I mean, selling the NEO because it was disposed of? And then the Bitcoin because it was disposed of? And then eventually the engine coin when I do sell that. How do we handle things like airdrops? I have massive amounts of coins from airdrops. I went on a little kick there for a while where I was applying for every airdrop possible, and I was making a decent income. I mean, a retiree's income at least, off of these coins. I was gathering them together and bringing them back onto the exchanges and get rid of them and using the funds for other things I want. So how much do I owe? Like, do I have that coin because poof, magically it was just given to me? Or do I have that coin because I bought another coin? So is there some value associated to it? I.e., is there some starting value that I would use to find out the difference to pay a capital gains tax on? I don't know. I don't think anybody really knows, but because taxes are an obligation, and it is a law for us to pay an obligation for us to pay our taxes here in the United States, and so that we don't get any kind of penalties, making that burden even greater, or worse, incarcerated or stripped of our possessions, so on and so forth. We would like, I mean, I strongly agree with the letter the lawmakers sent to the IRS to find more clarification. So great job, guys. Great job, representatives, actually representing the people and trying to find out what we as citizens of the United States need to do in order to be compliant. Again, educational advice only, not investing advice. I just heard about this today. Their letter just came out yesterday. So and their guidelines are being asked to be defined October 17th. Let's keep tuned to see what happens. Thank you once again for joining me. This is Bill P. from BP3 Crypto on BP3 TV. Ciao.